Hello everybody. Today I'm going to explain how to use the liquidation volume range heatmap as well as the whale momentum indicator. If you stick around, you'll learn exactly how to configure this indicator, and I will explain this setup in much more detail. First of all, what is a liquidation zone? It's a price area where traders' positions could be liquidated if the market reaches it. Our indicator is designed to estimate where these critical zones are located. So, how does it calculate this? First, it estimates the total number of buyers and sellers within a single candle. Then, based on the minimum and maximum leverage parameter you define in the settings, it calculates the liquidation zones for every individual leverage tier. For instance, if your minimum is set to 10x and your maximum to 25x, the script will calculate the levels for 10x, 11x, 12x, all the way up to 25x for for every leverage level within a given candle. It calculates the specific liquidation point. These values are then grouped together into price cluster, which ultimately generates the liquidation zones charts you see on your screen. Another important configuration is the price step mode, where you can adjust the price size of each individual cluster. This is set to automatic by default, but if you switch it to manual, the indicator will use the specific value you define in the price clustering step. Okay, next we have the look back bars count. This controls the number of historical bars the script analyzes to calculate the zones. Keep in mind that setting this value too high can overload the calculation and cause errors. If you need to analyze a broader view, it's always better to simply move out to a higher time frame. Finally, let's look at the time decay expiration. Okay, wait a minute. Since positions don't stay open forever, this feature controls how long a liquidation zone remains active on your chart before it's discounted over time. The indicator dynamically The indicator dynamically understands that a 100x leverage zone has a much shorter lifespan than a 25x zone. Lower leverage lower leverage means traders hold their positions longer, so those liquidation zones will stay relevant and live on your chart for a longer period. There are a few other settings here, but I won't dive into them in this video. Instead, let's talk about how to calibrate the zones. Honestly, in most cases, if you are switching between different timeframes or assets, you don't really need to touch this. But there are a few specific scenarios where you might want to activate it. To do that, just turn on the checkbox that says Show Calibration Dashboard Guide. This dashboard will display the calculated minimum and maximum values. Once you enter those numbers into calibrated mean volume and calibrated max volume, your indicator will be calibrated for that specific asset and time frame. Just remember, if you change the asset or move to another time frame, that manual calibration won't work. You need to do it again. By default, this parameter is set to -1, which means the indicator will automatically estimate the zones. However, if you notice too many consecutive zones displaying a very bright, intense color, that's your cue that it might be best to calibrate them manually. Let's look a quick example of how to calibrate this using Binance Coin. Okay, here on Binance Coin, 1 hour chart. Okay, here we have too many consecutive zones displaying a very bright, intense color. So I just usually put this on 0. The important here is this one. Okay. A calibrated liquidation zones allows for a better appreciation of the levels where the most volume accumulates. Okay. Um, Remember that the P letter alongside the arrow pointing toward the liquidation area is a key indication to factor in. Additionally, the whale momentum turning from green to red serves as an extra piece of evidence to weigh in. This is a this is a typical setup. All right, let me look at my notes. Now, I'm going to talk about the whale momentum indicator and the setup more specifically. The whale momentum indicator is the counterpart to the liquidation zones indicator, while the liquidation zone indicator tells us where the majority's liquidation zones estimated are located, and since the majority loses, logically what is hypothetically showing us there are the liquidation zones of the weak hands. The whale momentum indicator is the counterpart responsible for estimating the strong hands versus the weak hands for each leverage level. These levels are configurable when when it's green, the whales are bullish hypothetically, and when it's red, the whales are bearish. The important thing in this case is the momentum, specifically the flips from green to red or vice versa. If we combine this with the strong liquidation zones in the direction of the whale momentum flip, then we have the setup we had been talking about. It's also important to check if the zone immediately closest to the price on one side is heavier than uh, on the other side if that coincides with the direction of the wave momentum, then we hypothetically expect it to liquidate in that direction. For example, one moment. Okay, okay, this one, the original sample. While momentum flips from red to green, or in this case is green to red, one side um, check if the zone immediately closest to the price on one side is heavier than on the other side. If that coincides with the direction of the whale momentum, then hypothetically expect it to liquidate in that direction. Okay. Okay. Remember that the P letter alongside the arrow pointing toward the liquidation area is a key indication to factor in. Okay. So again, remember that the P letter alongside the arrow pointing toward the liquidation area is a key indication to factor in. Also, this coincides with the direction of the wave momentum. It just flipped from green to red, and also the zone immediately closest to the price on one side is heavier than on the other side. Okay, once the bar is closed, the indicator does not repaint. It's not a must, but the P letter plus the arrow pointing is an extra piece of evidence for the setup. Okay, um, okay, let's talk about other things. Okay, um, I prefer to use Bitcoin futures contracts for this indicator. Not only Bitcoin, but mean perpetual contracts. Look, the how are internal candles. Um, for example, this. Okay, due to TradingView limitations, the indicator can only plot about 16 levels above and below the price. If you want a broader view of the liquidation zones at price, you simply need to stack the same indicator with the same settings, changing only the grid, uh, grid starting level index setting. So let's watch that. Okay, here the second one, just click here. Click here. You have three or more indicators. So the same settings on both indicators, just uh, say changing only one setting, that's grid starting level index. Okay. Okay. um that's all for this one. I hope you found the information useful. Take care and see you next time.